Old versus new tax regime. Which one should you choose? Every year, millions of taxpayers overpay just because they chose the wrong tax regime. Are you one of them? Big question. Old versus new. Old tax regime gives you exemptions. New regime gives you lower rates. But which one actually saves you more? Problem and relatable pain point. Choosing without knowing can cost you up to 1 lakh rupees or more every single year. And it's money you could have saved, invested, or enjoyed. Solution and JH Consultancy's promise. In this video, we'll break it all down. Side-by-side comparisons, real savings, deductions, and examples. No jargon, just clarity. So you make the right choice and keep more of what you earn. Old versus new tax regime, the ultimate guide to choosing the right one, 2025. In this video, let's decode both regimes in simple English, show you exactly what deductions and exemptions apply, share live case studies and savings calculations, and give you a step-by-step guide to make your decision easy and profitable. This is not just tax advice, this is money-saving strategy. What is the new tax regime? Introduced in financial year 2020-21 under Section 115 BAC, became the default regime from financial year 2023-24, assessment year 2024-25, aimed at simplifying taxation by offering lower tax rates. But there's a catch. No ATC, no HRA or LTA, no deductions for insurance, loans, rent, or tuition fees. It's like saying, we'll tax you less, but you don't get any tax breaks. New tax regime slabs. Financial year 2024-25. Let's say annual income and tax rate 0 to 3 lakh 0%, 3 lakh rupees to 6 lakh rupees 5%, 6 lakh rupees to 9 lakh rupees 10%, 9 lakh rupees to 12 lakh rupees 15%, 12 lakh rupees to 15 lakh rupees 20%, above 15 lakh rupees 30%, income up to 7 lakh rupees. You get zero tax under the rebate, Section 87A. What is the old tax regime? This is the classic system we've used for years. Yes, the rates are higher, but you're rewarded for being a smart taxpayer by claiming deductions. You can reduce taxable income by claiming HRA, ATC, investments, LIC, tuition, PPF, ELSS, ATD, health insurance, home loan interest Section 24, LTA, education loan, donations, and more. Old versus new. Head-to-head comparison. Let's see feature. Old regime and new regime, ATC, LIC, PPF, etc. Old regime, yes available, new regime not available, ATD, health insurance, old regime applicable, new regime not applicable, HRA and LTA in old regime, yes, new regime no, not applicable, home loan interest, old regime, yes it's 2 lakh rupees under Sec 24, new regime, no. Standard deduction in old regime it's 50,000 rupees, but in new regime, 75,000 rupees, from financial year 24 to 25, 80, CCD2, NPS, employer for both old and new regime. It's applicable Section 87. A rebate limit old regime, it's 5 lakh in new it's 7 lakh simplicity, old regime, it's complex, but in new regime simple. It's ideal for in old regime, it's for tax planners, salaried in new regime, applicable for non-investors, freelancers. We have key message, old regime rewards you for planning. New regime is good if you want zero maintenance taxation. What deductions can you claim? Old regime, powerful deductions. You can claim ATC 1.5 lakh rupees, LIC PPF, ELSS, tuition fees, home loan principal, ATD health insurance premium, 25,000 rupees to 1 lakh rupees with senior citizens, ATE education loan interest, ATG donations, Section 24, B, 2 lakh rupees on home loan interest donations, HRA, LTA, conveyance, uniform allowance, and more. Standard deduction, 50,000 rupees. New regime. Only these few allowed standard deduction, Section 16 IA, 50,000 rupees, for financial year 2023-24. 75,000 rupees from financial year 2024-25 onwards. Applicable to salaried individuals and pensioners. Employer's contribution to NPS. Section 80 CCD2. Allowed up to 10% of salary for private sector employees. 14% of salary for central government employees. Family pension deduction. Section 57. Deduction of 15,000 rupees to 1/3 RD of pension, whichever is lower. Home loan interest on let-out property only. Deduction under Section 24B allowed only for rented or let-out property, not allowed for self-occupied house. Agnivir Corpus Fund. Section 80 CCH. Full deduction for contributions, employee and govt, to the Agnivir Corpus Fund. Additional employee cost. Section 80 JJAA. 30% deduction on additional employee cost for hiring new employees for 3 years. Applicable for businesses opting for new regime. Transport allowance for disabled employees exemption up to 3,200 rupees per month, 38,400 rupees annually. Exemptions under Section 10 still allowed. Gratuity Section 1010 up to 20 lakh rupees leave encashment. Section 10(10)AA. VRS compensation. Section 1010C up to 5 lakh rupees retrenchment compensation, death-cum-retirement benefits, etc. Employer contribution to EPF or NPS, or superannuation fund within limits. Travel, conveyance, reimbursement, for official purposes. Allowed if claimed through employer bills, example given travel allowance. Daily allowance for official tours, transfer allowance income from agriculture, fully exempt. Still fully exempt, if conditions met. Not affected by tax regime. Gifts from non-relatives, Section 56, exempt up to 50,000 rupees per year. Real case study example. Salaried employee gross income, 12 lakh rupees old regime, ATC, 1.5 lakh rupees ATD, 25,000 rupees home loan interest, 2 lakh rupees standard deduction, 50,000 rupees taxable income equals 7.75 lakh rupees. Total tax approximately equals 72,500 rupees. New regime, only 50,000 rupees deduction. Taxable income equals 11.5 lakh rupees. Total tax approximately equals 1,02,500 rupees. Tax savings equals 30,000 rupees. That's a family vacation, a medical emergency fund, or part of your investment. Who should choose what? Choose new regime. If your income is under 7 lakh rupees, rebate equals 0 tax. You don't invest in tax-saving options. You want a simple, clean, no-hassle system. You're a freelancer, gig worker, or beginner taxpayer. Choose alt regime if you have HRA, LIC, BPF, home loan. You're financially disciplined and claim multiple deductions. You want to maximize your refund. Your deductions exceed 2.5 to 3 lakh. The difference is real and it's in your hands. At the end of the day, tax is not just about saving money. It's about making smart choices with what you earn. Your tax regime isn't a rule, it's a roadmap. The question is, are you on the path that rewards you? The old regime rewards those who plan. The new regime supports those who simplify. Neither is wrong, but choosing blindly is. At JH Consultancies, we don't just file your taxes, we help you build your financial foundation. From tax-saving strategies to business setup, payroll and compliance, we're here to guide your every financial step. Like, subscribe, share. See you in the next video. Save tax, build wealth.